We are joined now by Paul LaMonica today, taking a look at Macy's, who had a pretty rough day yesterday, if I do recall. Paul, thanks for joining us. Appreciate it.
Yeah, thank you. Yeah, tough earnings report for the company.
So, I continue to think of Macy's and honestly just continue to get surprised that they have not gone the way of Sears or other large mall-based retailers. But clearly, over the last few years, as many retailers did, their stock got quite a bit of pump up. And, at the end of 2021, they were seeing share price approaching $35 a share. What did they tell investors yesterday on their earnings report?
Yeah, when they reported this morning, they warned that there are concerns about the broader economy, and that is a big issue right now. The CEO said that they entered the year assuming that the economic health of the consumer would be challenged. Those are Jeff Jeanette's words. Said that starting late in March, demand trends weakened further. So I think that even though there are signs that inflation pressures are starting to abate, keep in mind that the Fed has already raised interest rates dramatically several times to fight inflation. Inflation has been pinching consumers' paychecks, and now you have higher interest rates as well. So that is, I think, a reason why many retailers have started to warn. We've seen it with Macy's. We also saw it with Dollar General this morning. So the lower end discount side of things in particular, I think, is a big problem for retailers and consumers right now.
Do you believe, does Macy's, and have they said anything about their ability to, if they're looking out here, are they starting to warn about their ability to be a going concern? I don't think we're in that territory right now with Macy's.
No, not at all. No, Macy's is obviously a company that's facing many macroeconomic challenges right now, but this is still a very large, substantial retailer with a huge footprint, brick and mortar, even though they have been cutting back on locations like many retailers have done over the past few years. They do have a pretty strong digital presence as well. So, Macy's, by no stretch of the imagination, is a company that I think is on anyone's watch for, not being able to survive a potential recession. This is a company that should be able to withstand further economic softness. But, Amazon is hurting everyone. Walmart and, to a lesser degree, Target, because Target's struggling. Definitely, I think discount retailers are having a big impact on these general merchandise companies like Macy's.
Did it surprise? I know you mentioned Dollar General there for a moment. I can see why a Macy's would be hurting. I can see why a Target would be hurting, or a Bloomingdale's or a Kohl's would be hurting in this type of economy. I saw the same dollar store reports that you did, and was quite taken aback and surprised by the weakness there. Do you have a sense for what we are seeing from just the retail economy in general right now?
Yeah, we've seen this already with Target. I think they are obviously having some significant challenges. Home Depot and Lowe's, because of what's happening with housing as interest rates have moved up, they have been hit as well. But I think what Dollar General's weakness today, the stock's down 20%, really shows is that even though you would think that consumers would be flocking to stores that offer cheaper fare when you're concerned about the economy, lower income consumers are just going to pull back general, and that is obviously hurting Dollar General. Dollar Tree stock is down today as well, not as substantially as Dollar General, but this is a challenging time from a macroeconomic standpoint, and that's going to hurt, I think, the entire retail food chain, with the exception of a couple of winners here and there, your likes of Amazon and Walmart probably.
Paul, always appreciate it. We'll talk to you next week. You can check out Paul LaMonica on LinkedIn or at a Substack, paulrlamonica.substack.com. Thanks, Paul.
Thank you, guys.